the man on the screen when he was running in NBFC. That's Babak Pincus. So old friends coming back together, can I say?
Yes, you can see that.
Old
but you
friends
can also
coming.
say, yes, you can say that, of course. I greatly respect them. They're very professional
I was talking
people.
about you and me on the screen. Old friends coming back.
Old friends coming to, of course, old friends coming together indeed. And but also on the other front, yes. But I can also say that they made a fresh call. They again decided, after looking at the long-term prospects and the franchise, the quality of franchise we built, they studied that, felt impressed, they felt they could make lots of money. So hopefully, maybe say returns, hopefully, and that's how it started.
Investor, when they're investing, they look at brand, they look at franchise, they look at valuations, they look at growth, they look at NPS. And when a promoter is raising capital, he would say, do I need money for growth? Do I need money to clear up my dues? Or am I raising money because it is available? So let's understand the inside story. You do not need tier 1 capital, but you raised tier 1 capital. Why have you raised tier 1 capital? Is there an urgent need for it? Or this is an indicator for us saying that growth aane wali hai?
Growth aane wali hai.
Okay, so define growth for us.
The thing is that, see, in the last 5 years, our loan book has grown from 1,04,000 crores to about 2.4 lakh crores. 5 years, a little more than 2x. Okay. Now, we think that we should, in a stable manner, grow at about 20% because remember, we are not a large bank, like large bank. We're like a mid-tier bank in size. To grow at this pace should be comfortable. And for this growth, we need capital. So I think you can think of it like growth capital.
Quite offended. You call Nikunj your friend. What about this boy gang? Where am I in the picture?
You can call it the boy gang, the girl gang, but indeed you're in the picture. So
Great. So tell me, how much of this is going to, sort of boost your capital adequacy ratio by, and what dilution would it lead to?
This will increase our capital. It will take us close to 19%, which really puts us in a very strong position. I must add one point to it before I answer the second question. Right now there is so much of global this tariff war that's going on, US, China, and global events and some other geopolitical events, war, etc. So to be sitting on lots of capital is so much peace of mind. We can build a great bank. That is one of my fundamental reasons why we're raising this capital. In terms of dilution 15%.
Raising capital, it's a 15% dilution. But in the near term, then that will compress your return ratios because it would be a period before which you will start deploying. So what will be the drop in your return ratios, especially return on equity and return on capital because of this dilution?
See, first of all, let me just say that we're raising this at a premium to the book. So, the book value per share actually goes up of about 2.3% or so. So, that's important to note. Now, with regard to EPS, of course, comes down by 15%. It's pretty straightforward because dilution is 15%. But honestly, we should not look at it like that. It is also, I don't deny it is, but the way to look at it is also that we're building a bank of the future. So, in the sense that I just want to explain one fundamental point to you, which many of investors normally don't understand, but I want to take 10 seconds to explain that. See, early stage banks don't have return on equity. Don't have adequate return on equity. Business banks start with zero. So when you need growth, you don't have return on equity, you have to dilute. But the good news is that it is that the last 5 years made a lot of progress on return on equity. Next 5 years will make a lot more progress on return on equity. So at some stage, I really believe this bank will become self-sustaining on capital, and that will be a very, very important moment for the bank.
Capital is coming to you at a time when last 2 quarters have been tough. MFI, you took a lot of front-ended write-offs also. So when an investor comes in, the investor's first question would be, is the worst behind in terms of asset quality and the MFI write-backs? So how did you answer this question?
Yes, I told them yes. I told them exactly what I told the street. In fact, when they're giving analyst call after Q3 results, I said that Q4 will be the peak of credit cost because of MFI. I said that Q1, Q2, Q3, Q4 of 26, every quarter it should come down. And if provisions come down, PAT should go up. This is exactly what I told the street, exactly what I told them. And I also told them beyond that, I gave them a long-term picture. I gave a picture of what the story should look like 4-5 years from now. And I gave a plan, gave them a picture, and told them how the bank will look like, and I convinced them to invest. Let me just tell you, in the light of what's going on in the world, to get 7,500 crores of capital is also not easy. It was damn tough. And in fact, investors told me the probabilities were like 1 in 100. I'm very happy that we got the kind of capital.
And that's what we were discussing, that capital is not available on tap, and you managed to get capital at 7,500 crore on your balance sheet. I think this is fantastic. But this dilution also will have impact on your personal holding, right? Your personal holding will come down. Are you okay with that, or you'll also put in some money?
No, I'm not putting money. The thing is that you should know that all first generation people who create any entities, they dilute. I think that I'm really building an institution for the future. If you think of institutions like ICICI Bank, HDFC Bank, these really iconic institutions, how did they get created? If you went back in time 25 years ago, what was ICICI Bank? It was like maybe a few thousand crore balance sheet. It became what they became today by being steady. Or HDFC Bank today, like 25-30 lakh crore loan book. So all this happens when you create. So I think about building an institution for the long run, and every action taken in the bank is that in mind. It's not about holding and all.
Going through the timeline here, in April 2021, this is just after COVID, you raised 3,000 via QIP. And then next 2-3 years, which is once you raise the capital, they were bumper growth years for IDFC Bank. Now you've raised capital which is double than that of what you raised in 2021, if my maths is right. So that means that we are in for bumper growth or better than industry average growth, because this is a lot of capital, Mr. Vaidyanathan. It's double of what you raised in 2021.
Yes. See, the thing is that the short answer is that we are, of course, planning for growth, but more than growth, of course it's growth, but more than growth, to have a lot of capital gives a lot of comfort to everybody, to investors, because investors know I'm not going to come back to the market for, hopefully after this large capital, everybody will believe that we're not coming to the market for a while now. We have no intention to. Gives confidence to the rating agencies. We're already AA+. We have ambitions to become AAA. I'm telling you, mark my words. My eyes are there, and we want to get there. That today or tomorrow, or day after, we will get there. So that gives comfort to depositors. So we are running an institution. An institution should be like full gas in the tank at all points of time.
Absolutely. And what better, like you rightly said, Vaidya, that in times like these, it's more mental peace that you have so much in the coffers. But tell me, what would you deploy this money for? What would be the focus areas?
Okay. Let me just say that there are two big things ahead of the bank, which all investors should note. We have 3 lines of business. Our lending book is very profitable. We are making 4.3% operating profit. That's the kind of profit we're making on the asset side. It's really good. And even net of credit costs, it's quite profitable. Very profitable. It's very profitable 5 years now. Next, but we have the liability business, because we're a new bank. We set up close to 1,000 branches. We have 1,100 ATMs, people, technology, everything is coming up here. Wealth management, cash management, trade, FX, NRI business, current account, every business being rolled out in this bank. All that costs money. So right now, as the bank progresses, these businesses, some of them are a loss-making stage. They also turn towards profitability. That's the second purpose of this. But I want to say to people, some people may be concerned that, look, man, you're raising so much capital. We've been raising capital 5 years in a row now. I don't deny, I'm raising. It's a new bank. I just want to share this with everybody, new bank. I want to say that again to you. Because if you think of every bank that's raising money, capital once in 5 years or 6 years, 3 years, they've been there for 25 years, 30 years. We've been 3 or 5 years or 6 years now after merger. So it's a new bank raising capital with now greater scale and profitability. The frequency of coming to the market will come down. So let me just say that at least for maybe 2.5 years or something like that, we're not even looking at the markets.
Good morning, Mr. Vaidyanathan. This is Shrishti also joining in. But give us a sense that how will you use this capital to grow your MFI or the unsecured side of the book?
No. We are actually slowing down our MFI book. You can make a mistake once, not a second time. So we already are feeling quite bad that we got the MFI wrong, in the sense that we were doing very well for 7-8 years, but this industry issue that happened, we were also in the center of it, and we lost money. So let me say we lost money this year. We made money 5 years in a row, but still, nevertheless. So we are not growing MFI book in that sense. But every other business is growing. Our SME business is growing. Our corporate is growing. Even retail is growing very strongly. Gold loan business is growing. Frankly, we're all in growth businesses, and it's not about 5 years. Wake up 10 years, 15 years, 20 years, they'll keep growing. I told you, if you think of ICICI Bank, there'll be like 25, there'll be 30 years. They're still growing by 15, 17%. So for an early stage bank like us, growing 20 is not a big deal.
Wrap it up with one final question, which is that your NIMs are solid. And one of the reasons why your NIMs are solid is because of I won't use the word risk, but you did have exposure to the MFI space, which is a high margin business. Now that you are going to be going easy on anything which is unsecured, MFI, where you're not assured of the credit quality, eventually as you will start taking low risk, could this impact your aggregate historical NIMs? So
the thing is that MFI is one component which we are slowing down. We have to, because it's more cycle prone, let me say. But let me just make one clarification about MFI, so why we did it, so that it doesn't feel that we were not irresponsible about that at all. The MFI business helped us meet weaker section priority sector loans. It's very difficult to meet otherwise. It's a big price to pay for not meeting priority sector loans. Remember, we're a DFI converted to a bank. We didn't have priority sector, so we'd had that. It also helped us meet inclusive banking. It was also very profitable. So that is that. But still, having said that, we're slowing down for the reason we discussed. But that's only one component of it. But the rest of the business is all very profitable. We'll have strong NIM. Of course, there'll be some moderation. Let me call it, if it's 6 today, maybe it'll come down to 5.9 or something like that, maybe 5.8. But it's not like, we have a specialization. But remember one thing, our asset quality is really really fantastic by any standards. Look at our gross NPA is always less than 2, net NPA is always less than 1, credit cost is less like 1.8 or so. So these are solid numbers for a bank having NIM like we have. So we have a good franchise. It's like you have a good molecule. That's what we have. We have to scale it, and this capital will help us scale it. Good luck. Thank you for joining us. And thank you. And you started by saying that you're there, Aisha, there, your friends. I very sincerely, all of you supported us in our early stage. I want to thank you for that, and I want to just take this opportunity of thanking our new investors we're bringing in on board for supporting us when the macro environment is so weak, and finally to our board and to our employees who built the banks, made it so attractive for capital to come in, even when the global chips are down in the global environment. Thank you very much, sir. Good luck. Let's take a break. We are doing okay because we've not fallen, we've not gone up, the breath is okay. The global handover was not okay, and we are doing okay for ourselves, which means India is again outperforming.